Good day. This is Viv Govender from Rand Swiss, and this is another one of our weekly wraps. As usual, what we'll do is we'll go over the events of the week, news stories that came out, and discuss how they were important and how they might affect your investment decisions going forward. This week, we're going to be discussing three main factors, or three main events. The first is the US inflation number. The second is going to be the oil market at the moment, and the final part is going to be a bit of a deep dive into Russia, China, and what's happening there at the moment. Okay, so let's just start off with the US inflation number. Came in higher than expected, 8.3 versus 8.1%, 8%, which is kind of like the whispered number beforehand. So 0.2% higher, and it actually is a drop from the previous number of 8.5. So we're talking about a 0.3 drop. And again, considering the fact that the margin of error here is about 1%, the fact that there was a miss of 0.2 wasn't too dramatic, but the market took it in a very negative light. Why? Because if inflation is not dropping as fast as it had been hoped, we are in a situation where the Fed is going to be acting very aggressively going forward. Prior to this number, there was a podcast with Neil Kashkari of the Fed about a month or so ago, where he was discussing the fact that with the fact that inflation is coming down, the next rate hike was going to be between 0.5 and 0.75, depending on what's going forward. The fact that we had a miss, that we had inflation coming higher than expected, pretty much makes 0.75 much more likely, and there's even been discussion that 0.1, that a full 1% rate hike might be a possibility going forward. I think at the moment 0.75 is more likely than not, and that 1% would be a very aggressive move, especially considering the fact that inflation still is trending downwards, even though not as quickly as had been hoped. What was important about the number as well was the fact that gasoline prices, US petrol prices, were down quite significantly and were a big help in terms of bringing inflation down. But other factors like food and housing and so on kept inflation, still quite high. So what's happening now is we're seeing a bit of a spread out in terms of the sources of inflation in the US economy, which could be a bit of a troublesome factor going forward. As I've said to you guys before, what the real danger on inflation is what happens is when people start expecting inflation to be 5, 6, 7, 8, 9, 10%. Going forward, and not the normal 2-3% ups like the US Fed is willing to accept. 2% is what the US Fed wants. If for the next 10 years you're going to ask the average American and they said they would expect inflation to be 5%, the US Fed is in real trouble. What has happened is that inflation right now has risen, but the expectations have not risen as much. But eventually, after a period of time, a long enough period of time, inflation expectations will change. People will change what they expect, and therefore they will demand higher wages, that demand higher prices for the goods and services, and inflation will become embedded in the system. The Fed is trying to avoid that, and if they can't basically do it with 0.75, they might have to go to 1%, shock and awe kind of a statics to bring down inflation if they can. Okay, so US inflation higher than expected, seems to be springing beyond the market. Just the petrol price, housing, food and so on. Housing in the US, because of where they measure it, is going to be a real lagging indicator here, because it's not going to go down for quite some time, just because of the way the US, even the prices were to fall today, the US market or the US CPI number will not be affected by that for quite some time. Okay, to the side, inflation and something linked to inflation, the oil price. Oil prices have been bouncing off $90 a barrel, and they've done it a couple of times so far. We've seen, for instance, going to about 90 and going back to 105 and coming back down again, 90 to 95, 96, and that's the kind of thing we're seeing recently, and it's like 90 seems to be a bit of a floor, late 80s, early 90s for Brent crude. And that kind of makes sense for a couple of reasons. Firstly, OPEC has made it quite clear that they are willing to basically cut supply if prices go much below 90. So that seems to be the level that they're looking at the moment, 90 plus, quite frankly, which kind of makes sense, because that's kind of a region in which a lot of their budgets balance. These OPEC countries make a lot of money from oil, and they spend a lot of money from oil. And if oil prices are below, if they're making a profit, they're not making enough money to balance their budgets. So they need oil prices reasonably high to make that work. Like Saudi Arabia, they're making profits at $30, $25 a barrel. But they need much more than that, because they're spending a lot of that profits to keep that economy and keep that country functional. The next thing is that the US has been releasing about 5 million barrels a week in terms of oil into the market. That's about $100 a barrel roughly. That's basically $500 million a week. Doesn't sound like a lot. Over a year that's $50 billion, a lot of money, but look at the oil market, it's not a huge amount of money. But what you must understand is that the oil market is rather inelastic. Yes, if prices were to double tomorrow, triple tomorrow, demand would go down, but it wouldn't go down by 50%. Why? Because there's a lot of things that are required in the economy that require oil that are not going to change because the oil price has gone up a lot. You have to travel to work. Prices are higher. You'll complain. You'll spend your money. You might do. You're still going to buy a certain amount of oil, petrol to get to work. So there's a small amount of coming through from the US supply in overall terms, but it's important amount because in inelastic markets, small amounts matter a lot. But what this means is that they eventually have going to not only stop supplying this oil from the reserves, you can start buying it back. So you have this kind of like savings that you're taking stuff out of. When you stop, you've got to basically replace what you've taken out. So there's going to come a time, the next month or two, where the US Fed is going to, government is going to stop releasing that 5 million and start reversing that amount. It might happen over a short period of time, might happen a long period of time. So they're going to be from a net supply to a net demander, which is obviously going to be a big difference in terms of oil tourism prices. And indications are they are looking for something around $80 a barrel to start buying. Okay, so we've got like two kind of floors in here. OPEC at about 90, the US government at about 80, where there's going to be buyers coming in the market at those prices, which kind of make me, to a certain extent, puts a floor on the oil price. Okay, so that's something to watch out for again. Now, finally, let's look at our deep dive into Russia and China. For those that don't know, Russia is getting its butt kicked. It seems to be, at least. I mean, from all I've seen, the Ukrainians' current, counteroffensive against the Russians has been extremely successful. You can't say for certain. Lots of lies happened here. I mean, who remembers the ghost of Kiev and Snake Island and that kind of stuff that happened at the start of the war? There is definitely lies from both sides around here, but it does seem to indicate, because I've seen, for instance, Russian commentators in Russia on Russian television talking about the fact that things are going badly. Then things are really going badly when you have people willing to go and challenge Vladimir Putin on Russian television in Russia. Because you are basically putting things at risk. I mean, to get an idea, just look at the number of oligarchs, number of oil officials, the number of oil, businessmen having these really strange accents, walking out of hotel buildings at the 90th floor or something, or taking one-way trips into the sea, that kind of stuff. So dangerous to go against Putin. The fact that there's people doing that does indicate that we are maybe actually seeing a reversal. Look, it's not by any means an overdone situation. I think the Ukrainians have gotten say a few thousand square kilometers. Ukraine is hundreds of thousands of square kilometers. So we're talking about 1% of the total land area, and even a small percentage of the population being freed here because of changing occupation. If the Indians say freed, the Russians would say reoccupied or whatever it may be. But anyway, the Russians are on the back foot. There is a serious chance, depending on what the weather situation looks like, that Europe might be able to get by winter without too much collapse or catastrophe. A lot of pain, but a total collapse might occur. And every year that goes on beyond that, every year that we have Europe basically able to make it through after this Russian situation, the stronger they'll be, because they'll be able to basically create new supply lines, new infrastructure to get themselves the energy they need from elsewhere. So Europe is in that situation. China, growth rates under pressure. We've talked in the past about the Chinese property sector under a huge amount of pressure, and the Chinese property sector is basically a third of that economy. Okay, hugely exposed, along not just to small companies, to banks. It's exposed to individuals. Millions and millions of people basically have invested their life savings in property, and sometimes people are putting half their income towards a mortgage or something because they think that's going to be their future. Okay, China obviously has its issues with Taiwan. The Americans have come out recently and banned a whole bunch of stuff in terms of exports to China. Not Chinese imports, but exports to China, because they're trying to reduce the Chinese ability to do things, for instance, like AI, surveillance, and so on. So a lot of technology chips are not going to go to China anymore. We do, of course, know that Russia, they had that SWIFT thing, basically, where they were kicked off the international financial system, effectively. So, in terms of the outlook, China, some issues. Russia, things are bad. Guess what happens in this situation? New friends. Necessity makes friends. So the Chinese and the Russian leaders are meeting this week. And my forecast is this. I do think that there's going to be some kind of alliance between China and Russia going forward, because it does not make sense for China to totally abandon Russia, because China knows it's going to eventually come into conflict with the West anyway. It seems to be quite clear that's going to be the case. Russia is already in conflict with the West. If China lets Russia go down without too much of a fight, when China itself comes about, there'll be no one to help China out. There'll be no linkages there. China needs natural resources. Russia is a huge amount of land, biggest country in the world, lots of oil, lots of agriculture, lots of all these minerals that you need. China needs those things. Right now, it sources a lot of the stuff from places like Australia, from South America, from the Africa. In the conflict with the US, with NATO, those kind of places, quite frankly, Australia goes away, probably South America goes away, and probably Africa goes away as well. The Middle East goes away as well in terms of oil, because quite frankly, the Middle East can't export oil without the US assistance. Not just the US can stop them. The US just has to say, remove that assistance, and the whole Middle East does not function in terms of export. The US piece, the US system is required to have oil exports happen. Without US Navy patrols, tankers and container ships and transport of commodities from places like Africa and South America to China, not going to be possible. So China is going to source raw materials. Russia has that. Russia has a huge demographic problem. China has a huge demographic problem. But in the moment, China has a lot of people. Russia has had a declining population. China has a lot of people, also declining population. But there's a nice little synergy, at least for a few decades. And they may be joined by places like Iran, places like Venezuela. Obviously, North Korea is effectively a client state of the Chinese anyway. And so you might have a bifurcation of the world. North America, Europe, parts of Africa, South America, maybe parts of Asia as well, like Japan, and places like South Korea, and maybe even India. There's a big flux thing. India may or may not come into play here. And then on the other hand, you'll have the Chinese and the Russians and the Iranians and the Venezuelans and maybe the Sudanese and maybe the Ethiopians and maybe whoever knows out there that has not got the good books with the US. Burma, Myanmar, maybe Pakistan. So there's a bit of a bifurcation. Economically, not as big as the West, but we're talking about billions of people here on either side. So quite a large population thing here. Like I said, India is a big in between. India would like to help Russia, but India is a much more of an enemy of the Chinese than they are an enemy of the Americans. The Chinese have and currently do have territorial claims on places that India says it is. There have been people killed. Strange little skirmishes happening with unarmed individuals throwing stones. In Google, there's been like stone fights between them, the Chinese and the Indians on the Himalayan border. And people have died. It's a weird thing. So it depends on where that goes through. It's quite possible that India could be lost because there's quite a big anti-Modi movement in the US, and if they maybe go against him enough, he might be willing to go to the other side. So that's all in play. So a big meeting this week. Expect for the next few decades that China and Russia may be more of a alliance, like we think about, for instance, the Italians and the Germans during World War II, or like right now between the Americans and the British kind of thing happening, economically, militarily, and I think that's something to be concerned about, because it does look like there might be a bifurcation in the world. And even though one side is much, much larger economically, the US, Europe together is much larger than what the Chinese and the Russians and so on are going to be like. Population-wise, we're talking about a significant chunk of the world's population in either side here, much more even. And in terms of like certain raw materials and certain manufacturing, we are looking at a very, very uncertain kind of future, because economic value is one thing, but not all economic value is equal. The economic value of manufactured goods and of raw materials is, I think, a bit stronger than the economic value of yoga lessons and movies. And Russia and China are more towards the raw materials manufacturing end of things, and Europe and America are more towards financial and movies and yoga stuff. So it may not be as a one-sided a fight as you might think. Okay, that's it for this week. I look forward to speaking to you again next week, and cheers, have a good weekend.